Hello, dividend executives. Welcome back. The stock market is open, so you already know we are buying assets and we are adding stocks to the portfolio. The question of the day, and I've been pondering this over the last couple of weeks, is it time to sell everything and switch our strategies up? Do we like how this dividend portfolio is playing out? It's been about, almost 2.5 years since we started this portfolio. And yes, it is printing record cash each and every single month, but is the account going up and to the right as much as we'd like it to? I want to look at some of the numbers on it. It is a record-breaking month when it comes to passive dividend income, which I do love. I love the paychecks coming in on Tuesdays, coming in on Fridays, and slowly but surely stacking. I love getting closer to house money, but as an investor, you're always comparing your portfolios one versus another. Which ones are doing better? Which ones are doing worse? I know this portfolio is structured on high income and that it is giving me, but are we missing out on some more money over the long term? So I want to hear you guys' comments. Drop them below what you guys think. I've ran this past a couple of people in the Discord to get some thoughts on this as well, because this is no joke, right? We're talking about, $49,000, $50,000 worth of my money. And what could that look like in a year versus what it's going to look like keeping it in dividends? So I want to jump into that. But first things first, as we do each and every single Wednesday, it is time to buy some assets. Look at our dividends that we got from last week, just under $500 worth of passive dividend income. And some of the plays we're making, right? So let's jump into it. First things first, let's look at the dividends that came in over the last week. We had some nice paydays come in on Friday and on Tuesday. So QDTE came in at $59.81, ULTY at $174.30, YMAX at $81.10, Coney at $34.38, which gets us even closer to house money on that one. XDTE $59.01, HOOW at $58.37, and then TSLW at $19.10. Really not so great on TSLW. Love HOOW so far, and I can't complain. We're slowly but surely moving. The market is chilling out a little bit. We have NVIDIA earnings tonight if you're watching this on drop day. And so that's going to move the market. Obviously, if they kill it, then we're going to see a nice movement in a lot of ETFs and a lot of stocks. If they don't do well, they don't have good guidance, they don't beat, then we're going to see the exact opposite, right? So those are things to keep in mind. And how's the portfolio doing? Well, we're pretty much flat for the day. For the week, we're up about $1,400. For the month, up about 1.6%. And I want to keep that in mind, right? 1.6% or $770 over the last month. And I want to look at that when we're comparing versus maybe in options, right? 3 months up 11%, year to date up 13%, 1 year up 31%, and then all time since we started this portfolio, we are up $15,000 or 44%, which is not bad, but could it have been better? That is always a question in every investor's mind. So let's jump into it. For first things first, it's time to buy some stocks. We got buying power of 1,959. We have some options on the table. I ended up selling 2 cash secure puts into next week on MSTX, bottom of the chain, super low delta, 0.0376. And we sold both of those for 11, which means somebody was probably rolling on the back end for $1 to close. And so we got that done, and we got paid $22 for that. We have some options on the table with MSTX this week. We're already up $104 there. We'll probably just let those expire with this or potentially roll on Friday. But I think we're at, week 13 or 14 in a row of selling MSTX puts closer to the bottom of the chain and letting them expire completely worthless. So we love that when it comes to adding some up and to the right to the portfolio, right? So those are the options on the portfolio. And SHC VTI every single day. Of course, those are purchasing $5 of each of those. But I want to talk about the new strategy, and I want to talk about, let's see. So BITO, we added that one. We have 25 shares there. And then QQQ, this is the new strategy, right? We get paid from our weekly dividends, and we put it into growth assets. You guys know I've been trying to switch this portfolio as the dividends have been coming in and they're getting closer to the goal where I want them, to where they're producing about $25,000 a year. I want to start adding some growth fundamentals to the portfolio. And so we're taking our QDTE dividends and we're taking that exact amount of money and we're just throwing it straight into QQQ. What this is going to do is we are just going to redistribute it into something that has more growth potential. Now, how this will play out over time, we'll see. Right now, it's pretty much flat on the position. We're only up about 40 cents. But I think long-term this will be well, and it'll give me a little bit more diversity in the portfolio, and it gives me And it gives me a nice exposure to some growth in the portfolio as well, because we don't have a lot of growth plays. Really, the only growth plays we have in this as of right now are SCHD, VTI, and then JEPQ's been growing pretty well. I think we're up, almost like 10% on this one. Yeah, we're up 11.5%. So JEPQ has really been one of the best investments because it does deliver that, I don't know, I would say $18 to $22 worth of dividends each and every single month. Plus, we have the growth story being up 11%. And we've been in this one for a while. So potentially adding to that one as well. So that's what we're sitting in the account, adding some QQQ today. I'm kind of sitting on the rest. We reinvested a bunch of stuff. We reinvested all our dividends from XDT. We reinvested all our dividends from ULTY. And we reinvested all our dividends from HOOW. So lots of reinvestments there. The cash going into QQQ. And then we're just chilling for now as we slowly but surely build up the buying power and pay down the margin maintenance that we have on the other position. So that's where we're sitting in the account. All-time high in the portfolio, $49,000 as we push towards $50,000. But I want to take a look at the data. But first things first, I want to take a look at some of the dividends that are coming for this week. So we have some dividends coming in. They're okay. Some of them are great. Most of them are just MSTY at $1.08. I'll take the payout. I think that leaves me with about 3-ish months, unless we have some massive payouts, 3-ish months or so until we are completely back to house money when it comes to MSTY, which means 100% of my investment in my 100 shares of MSTY will be completely paid back to me. And we'll receive $108 this week. So we love that. Another one on the list for me in this portfolio is YMAX coming in at $13.72. So lower than last week, higher than the week prior to that. Right there in the middle. And I'm okay with that. If NAV can hold up on YMAX, I'm all right with that 13, 14, 15 cent payout each and every single week, especially when I have 500 shares. And then ULTY broke the dime payout, coming in at 9.49 cents a share. You guys know we have, about almost close to just under 1,750 shares. So we'll have a nice payout coming there as well. A little bit less than the average since inception, I shouldn't say since inception, since we started investing in the fund, and that's okay. I'll still take it each and every single day, especially if it means that NAV is chilling out and we're gonna hold some ground there. So RDT, XDT, and QDT, will jump into those, but they were all a little bit lower, but not too far off their averages. So let's take a look at those. So far, this is a record-breaking month, so I cannot complain. We hit our goal. We are sitting at $2,138 worth of passive dividend income for the month of August. This is where it's come from. Obviously, switching from RDT to ULTY has paid massive payouts, right? Last month, when you look at RDT, it paid about $244. Now, since we switched to ULTY, we moved that capital over. Now we're collecting, 3 times that with ULTY, which is great, but only if the NAV can hold up, right? So that's the one piece of the puzzle that we have to continue to monitor. And if the fund keeps decaying away, then I just don't think it's going to be worth my time. But we'll take a look and we'll watch it. It is a massive dividend payer, so curious what you guys think on that. So we hit our monthly goal there. That brings us up to $12,911 with the dividend income. Record-breaking month for the portfolio, and we hit our goal of the $1,968. What do we have on deck for Friday? Well, QDT should be paying about just over 20 cents, so $51 there. XDT at 46. YMAX should be coming in around 68. Like I said, not a great payout there. And then MSTY 108, and then ULTY should be paying us around 165, and we will reinvest that as we continue to drip towards 2,000, and then I'm shutting drip off at that point, and then we will decide what we want to do with the money once we get there. But to the $25,000, we need about $12,000 left to hit our goal, so we have a lot to go to hit that, but we're slowly marching towards it. Now, I talked about it, and we're gonna go over it in a little bit of other scenarios, but this is how things are stacking up. When you look at over the last 3 years, in August, since we started this portfolio, you can see August 2 years ago we went from 113 to last year 882, this year 2,138. So the portfolio is making big strides. Now it's a bunch of things, right? Obviously, we're stacking shares. We're adding capital each and every single month, no matter what. We've never missed a week in the entire 2.5 years since we started the series. But yeah, things are just starting to snowball. So when we talk about the snowball, you've seen it here, right? So XDT, QDT alone, we've made 2,700 in dividends. We've dripped ourselves 56 shares. XDT, similar picture. We've made 2,500 and we've dripped ourselves 53 shares. And then YMAX, We're not dripping anymore because we're at 500 shares. We've been doing that since week 31, and now we're about week 49. And we've dripped 88 shares, and we've made $2,911 worth of dividends with the total return of about 10% there. And that's taking into account the face value of the shares as of right now, plus the dividends that we have received. So we love to see that. Between ULTY, QDTE, XDTE, and YMAX, we're getting paid around $350 to $375 a week. So we love that when it comes to the corner. It's some really good passive income, and it's starting to stack, and we love to see that. But we have to keep in mind what the drip scenario looks like, right? So if we look at ULTY as of right now, we're at 1,743 shares as of the last dividend on a Friday. Then we dripped ourselves some more shares on Monday. And so we'll be, probably poised to drip ourselves another 30, 31, maybe 32 shares. And so you can see things are starting to stack, right? So if we take the 1,743, we put it in the drip calculator, we're looking to hit that $2,000 figure or 2,000 share figure here probably in the next. It depends on the share price, of course. If the share price drops, then we'll obviously pick up more shares, or if the dividend goes up, then we can pick up more shares as well. But we're looking about 8 weeks out from hitting that. So going to be done by the end of the year. And then at that point, we will decide whether we put it in a growth asset, whether we put it in something that's a hedge against the market turning down. I know a lot of people have been putting hedges in, so we could look at something like that. It just depends. Or we could keep stacking some of our assets as we move towards our 2025 goals. Which the 2025 goals, we don't have a whole lot left. SCHD, we only have 528 to go. VTI, we have 883 to go. XDT, we have 718. And then ULTY, we have $1,331 left to go there. That's based off the 1770. But if we're dripping ourselves, $160, $170 each and every single week, that's going to go pretty quick. So we have to keep that in mind when we're looking at things. The average drip, of 27 as of right now, it's going to take us about 8.5 weeks to get there. And we have 17 weeks left in 2025. So we need to invest on average $203 a week in order to hit all these goals right here. And 100 of that will be cash, and then the rest will come from the reinvestment. So keep those things in mind. So that's where we're sitting. But the video, the title, the actual thought in my mind is, do we just sell everything and go straight to options? You guys know I'm a big options trader. I started this portfolio because I wanted passive dividend income, but it's hard for me to look at it when I look at, like a 1-year chart on this portfolio versus a 1-year chart on some of my other portfolios. The picture just doesn't look as good, right? And what I mean by that is when I look at a balance now of $50,000 and I can, let's say, do 2.5% a month, which is pretty doable when you trade options, even at low deltas, about $300 a week, $1,200 a month in that first month, and then continue to add a capital of $400. We're talking about a portfolio that could go from $50,000 to $70,000 by next August. And the snowball gets bigger. You can see the snowball goes from $1,250 to $1,764, 65 basically by next August. And so do you guys think that's the better move? Is it better to just move this account just like all my other ones into an options portfolio? Should I do a mixture where I start taking some of the cash that we're receiving from here and then just start stacking the buying power so I can sell more options and just stay in all the same positions I'm in now? Do I sell some of the positions and move from there? Curious what you guys think, but I love looking at the numbers and saying, hey, you know what? If I just sold every single position in this portfolio, I went to cash secure puts only, and I sold cash secure puts to collect about 2.5% a month, how would we be looking in a year's time? How would the snowball be growing when it comes to option snowballs versus dividend snowballs? And then on the flip side, if we keep it into a dividend portfolio and we stop buying more assets and we just let it start printing, would that look better in the portfolio? Always curious to hear what you guys think. Lots of ways to invest. Obviously, I have a variety of portfolios when it comes to long-term investing, options trading, or dividends. But I'm just curious what you guys think. So that's where we're sitting in the portfolio right now. These are the thoughts that are on my mind, and I keep going back and forth on what would be best for the portfolio long term. But I also want to keep in mind what you guys would rather see. Would you rather see dividend content, or would you rather see options content all the time with a couple $100,000 a week? Just curious. So thank you, everybody. As always, appreciate you for tuning in. Hopefully this at least sparked your mind to think, are the investments you're in right now ones that you want for the long term? Are they ones that you want over the next year? are they ones you want to keep stacking and buying and growing? Appreciate everybody. Happy investing. We'll catch you next week.